spirit, hello again traders. Right, in the spirit of making these trades while I think of them, here is a fantastic example of something I look for whilst running through my watch list. So if you watch my videos, you'll know I sort of think slightly outside of the box. If people tell me it should be done one way, then the first thing I do is ask myself why, and if it doesn't make sense, then I discard it. And then if people say, and if it does make sense, then I'm all over it like the proverbial rash. So here's something that I really like, and I've just literally opened this chart, so I thought I would talk about it quickly now. So with FX trading, my strategy is to get in and out quick at the Frankfurt Open, and then my day's work is done, London Open and all that lot. Get in when it's volatile. So some of the best FinTwit traders that I have found have the exact same strategy with stocks. K is one. I think it's Options Trader Chick is her Twitter handle, but I've seen her numerous times say I'm in and out quick, and then my day's work is done. So let's suppose I just opened this chart on my current wish list. Disregard the name. It's this is all sort of revisiting now old stuff with new eyes, and I'm so you've probably gathered by my last few stock trading videos, I am so excited about this now. It's just clicked, and I'm getting trade after trade after trade. The hit rate is phenomenal, and the potential is also phenomenal. So back to this chart. Why do I like it so much? Right, so in the light of what Kay said, get in and out quick. So we've had a push up here, we've got a wick formed on this 15-minute chart, and what do I want to see? Right, I want to see a continuation of that. Everything stacks up. I've just crossed over from below to above the zero line with the RSI. This is the previous day. There's the push up, here's the pullback, here's the bust and break and close. That is effectively the break and close there, or this tiny little bar here actually, but I wouldn't want to enter that one really, because we're straight into the 89 EMA, which is this orange one. Thanks, Chris. So get a wick, hit it, and then we can see what's happened. The market started to mature, if you like, for the day. We're only 30 minutes into the day, 2 15-minute bars, possibly 45 if you include that one, and then we've had a pullback, test the 89, and then you could do a trend, swing trend song here: low, high, high, low, high, high, pullback, continuation. So support, resistance rather, becomes new support, and at this point in the proceedings, I want to be out playing golf or having food and dinner with friends and stuff. So I want to be in and out here and not involved in what is hours of sideways motion. So same thing happened here, which is why I wanted to use this example. Exactly the same thing. Market opens, quick push down, tested the this EMA. I'm not quite sure which one that was, but it's very significant. And once again, if we'd entered after that 15-minute tail, fill the wick, and boom, we've got a trade. So these are just random choices. So I'll talk about now how I fill my watch list. It used to be, prior to my light bulb and eureka moment, study tons of charts, look at tons of FinTwit traders, look at possibly spend weekends and weeks studying charts. What else? Scanners, screeners, whatever you want to call them. Tons of work on those, and all of it is totally unnecessary. we've got a 2B reversal here, or a trend line reversal, and that's all we're worried about, really. Trend line, you can see it if you follow me on FX, you'll or my FX stuff, you'll know exactly what I'm talking about here. Trend lines and trends. And if we had come in, suppose I'd not been there for the open of the market, been out doing whatever I do in the afternoon, come back in the evening, and we could have clearly seen that this was in an upwards move. And what I want to do is connect lows that make higher lows, and then finally break out, and that there would be an ideal opportunity to get in if you weren't around at the market open. So every trade looks the same. When I say that, I mean it. So that's it. Simply all you do, as I've mentioned on numerous other videos now, is have a watch list. I populate the watch list quite regularly with what people are watching. Not really interested in the actual traders that much, apart from International J, who I love, and there's plenty of others as well. But when I find a watch list with a trader that obviously has a clue what's going on, thanks guys, then I'm not overly worried about, oh, if it's over that, do that, if it's below that, do that, you know, under, over, and so on. All I'm worried about is what they're looking at, the tickers. So more often than not, the tickers are in my list anyway, but for whatever reason, if they're not, all I do then is go back to my list. Let's we've done, where was I up to? Asan, CVX, DE, JPM, JP Morgan. I haven't added that one, so look at my list. I add JPE, I think it was. It wasn't JP Morgan, possibly. Elect JPE, so let's add that one to it. It's not one on that's a mess. Let's have a look. Was this correct? Oh, JPM, it was JPM. I'm losing the plot. Too early, haven't had a coffee yet. Let's go back, let's delete that one because that's horrid, and then JPM, and then whack it on. And this one is not that interesting to me. Okay, we've got 3CR, we've got a little 2B reversal going on here, descending trend line, up trend line forming, but it's at the moment for today it's not perfect. Yesterday we're touching on the dragon 34 EMA there, and things were looking pretty good, but after the 15-minute it's not that interesting. This could just drop back to the 34, so I would disregard that one in terms of trading it yesterday. So it's simple as that. This one we can clearly see we've broken the 34. This pattern is a 2B reversal on the I can clearly see that off of that 89 EMA as well on the 5-minute 1-minute chart. I'm not going to go down there, but you know, you develop a you will know this if you follow me. If you're not a novice at this, you'll know you develop a knowledge for these things. Again, reversal pattern. I mean, that's a 2-2 reversal by the looks of it as well. So that's all we are interested in, looking for the best setups using every tool in the toolbox, and I've mentioned that many times. So let's add another one. Low. Once again, reminder, I'm not really interested in anything about the stock. Why would I waste my life worrying about doing all that analysis when all I need to look at is the chart that I trust so much? So yeah, I mean, that's for today, a potential trade for today. That doesn't really interest me. I'm looking for stuff that crosses over. So let's see if we can find another one. Low. mRNA, that one was on my list yesterday, so I think that was done and dusted. PFE, we'll stick mRNA into the list because this is a different list now, and let's put PFE. The reason for that is I don't want to miss out any real good opportunities based on what other people are looking at in my particular list. So, and then what I can do, this is one I looked at before because I've actually given it a color code. Again, that's not really interesting too much, although I can clearly see we are below the dragon. We've got a 3CR to the short side, and we have well, price is down here at the moment anyway, and we were potentially testing that EMA there. So once again, I want to be looking at these breaks through the dragon, clear pattern. You know, there is no need to take risky looking trades, and that's the point of these videos, to be honest with you. So let's go back. We've let's pretend we've added the watch list up totally. It's coming up to 2:30 market open. Now I've arranged them. If I want to look for shorts, longs rather, then I've arranged them in ascending order for strongest to weakest, and then I can just load them up and see what's going on. That looks a beautiful opportunity for a potential long. Push down, pushed up, there's the pattern. We've broken out. We can use our line chart analysis. We can clearly see that on this 15-minute chart that has closed up through it. Back to the candles, and that's why I like the candles through line charts as opposed to worrying about the wicks. In this instance, when I'm down here, 3 candle reversals and wicks still apply, but we are moving towards more line chart stuff. And then it's another additional thing I want to add to this is moving up through the time frames. We can lower this line if it is on the 30-minute lower. I hope that makes sense. So yeah, I mean, that's a perfect example of what I'm talking about. Drop to the line chart now, and you can draw that line down there. There you go. That is a perfect example of what I talk about. Very difficult to come across those a lot of the time. So now the 30-minute overrides the 15-minute resistance. The 30-minute is lower. A break of that suggests that you know, we're absolutely piling on. And then you can see on this 30-minute chart, bust, pullback, break and close. So that's a great looking example. Not really worried about the start of the day, the time of day, the new day and stuff, because this suggests now we've had a push up, and we are potentially ready. You always have to be careful for a pullback. So I would be watching this at the open of today's market, Thursday, to see what the 15-minute does. We can see we're at that resistance level there too. So if the 15-minute pushes up, in that example I've showed at the start of this, creates a wick, pulls back, then I would definitely use the lower time frames to time that entry, because at the end of the day, this is a real job, real professionals. If you've got the 5-minute, 1-minute chart there, do the work and don't be lazy. But that's I love that example because of that 30-minute, 15-minute line chart discrepancy there. So that's great. Priceless in my opinion, as an example of what I'm looking for. So once again, if I want to go to possible shorting opportunities, couldn't care less about the ticker names. All I'm really worried about is prices, liquidity, and spreads and so on and so forth. The ability to actually earn money out of, and the distance to potential areas of supply and demand, support and resistance, whatever you want to call it, stopping points. So let's have a look at that one. I haven't looked at that one recently. I remember that one came from Alex. So yeah, I mean, we can clearly see the move has happened on that one, and I watched it yesterday. SPCE, I had a play on that one myself and made a as you can see, all the drawings are still on there, made a chart about it online. TTD, yeah, obviously I've used that one in the previous video, and so on and so forth. So, you know, that's it. Keep it simple, guys. Learn to spot your patterns. Learn to spot a pattern in price movement, like Kay and various others say about trading, getting in and out quick. There is no need for greed. If what you need is $100 a day, make one trade worth $100 and then go and do whatever you got to do. If you need $1,000 a day, make one trade worth $1,000 and get off and do what you need to do for the day. That's it. Simple as that. Couldn't be simpler. Load up your use FinTwit for finding what people are looking at. Load up your watch list, and then, in my opinion, just look for the patterns, the best patterns. Etsy's a new one in my list today, and I can see that one has just broken out of a massive level there. Big old room to all green there, all red here, effectively a big gap, so that looks interesting to the upside. Then do your multi-time frame analysis and to drill down and find the best looking entry points. So thanks for watching. Have a great Thursday. This thing's weird.